Hey Lautaro, this is Ryan with TrendLizard.com. You sent me an email to take a look at a Chile ETF for you last week, ECH I believe it was. Thanks for the second email you sent me. I'm going to take a look at two things for you today. XRP for what I believe is the Ripple crypto coin, and then AAL, which is, let's see, that is Anglo American. So I'm going to take a look at both of those guys for you. I'm going to start with XRP. This one was a tough one. This was a tough one to look at from an Elliott Wave perspective. It doesn't necessarily mean that it's a problem to trade. It just means it's pretty hard at this point to justify it from an Elliott Wave standpoint, and I'm going to show you why. We're going to start from the beginning here back in 2015 and on a linear scale. So every box that you see here is just a 0.2 movement. So everything is kind of equalized. The result of that is what happened in 2015, 16, and 17. Basically, it looks like a flat line. Price action from there really kicked off in 2017. Huge spike from next to nothing, about 0.2 up to 3.2, and then it gave it all back. And then it's kind of traded since then, largely sideways, and in 2021 has become a lot more active and has gone from that same 0.2 up to about 1.1, currently trading at 1.06. On this scale, it looks just like a spike and then a tank, and maybe some action to the upside that's going on now, something interesting. Not a very enticing picture. Now, we're going to change the scale and look at it in a logarithmic way just to see how that changes things, and it certainly does change things. You can see that action in 2015, 2016 is not just flatlined action. Every box shows a similar percent move, so that kind of equalizes things a little bit. So we can get kind of creative with what we're doing here, but what we can see is an advance off the 2016 low, a 5-wave move to the upside, and then a 3-wave pullback. Looks good. The only problem here is that despite the way it looks, this 3-wave pullback actually retraced 97% of this 5-wave advance. Generally speaking, I only want to see a counter trend move retrace 61.8% or less of a trendy move to indicate that the trend is still up. That didn't happen. Okay, so how about we just don't worry about that and we just move on and see what the next piece looks like. So let's look at the advance off the 2020 low here to the upside. Here's that move. Same thing, we had a big up move and then a sharp down move. Looks okay. You can kind of get creative here. You got to call it a leading diagonal to label it as a 5-wave move, but the pullback certainly looks like a 3-wave counter trend move. But again, it retraced 92% of this up leg, this pullback did. That's pretty tough to stomach, just to look at these up moves and almost force a bullish labeling on it. That's just not something I ever want to do. I want it to look bullish, and that's why I want to trade it. I don't want to trade it and then try to find a way to make it look bullish, which is what this feels like. But hey, how about we ignore this and then we focus what's going on, the 2021 move to the upside here, because that's been where the real cheddar's been made. So let's go ahead and do that. So now we zoom in on this action off, I guess, the late 2020 low. And again, you can kind of jam a 5-wave labeling on this move to the upside and say, okay, we want to be bullish. We're trying every which thing to do here. Let's call this a 5-wave move and this a 3-wave pullback, even though it got retraced by so much. Call this a leading diagonal. Call this a counter trend pullback, even though it got retraced by so much. And then you get to this one and say, okay, kind of same thing. It works. It's just not ideal, and nor would I have any confidence in this kind of labeling. Sometimes things just aren't governed by the Elliott Wave theory. Not everything that you put on a price chart is just automatically going to fall into this category of being governed by changes in herd mentality for whatever reason. I don't know what it is, but that's why you stick with things that make sense and things that look good. Based on Elliott Wave, not finding something that you like and trying to put Elliott Wave on it. So in that respect, I would have a really tough time trading XRP on an Elliott Wave basis. What we can say is, you've got this nice strong move off of March's low. This actually looks trendy, one of the strongest, nicest moves we've seen to the upside, and it's going to have bullish potential as long as it's trading above 0.75. So you can be bullish on it in that respect as long as it's trading above this level. But again, it comes at many concessions along the way, saying so many deep retracements, so many unclear moves. It's just not something that I would trade based on the Elliott Wave pattern. One thing to take note is that this big choppy move that happened in February and March does look like a triangle. Generally speaking, when triangles happen, you get a final thrust, and then you get a pullback. That's generally what happens. So that's something to keep in mind. But at the end of the day, if you want to trade it and use some Elliott Wave basis, you can own it as long as it's trading above 0.75. I personally don't like it. I don't like the deep retracements. I don't like the way it looks overall. So that's our take on XRP. So let's move on now. Let's take a look at Anglo American, ticker AAL. It trades on the London Stock Exchange. This guy I do like very much. This is a great looking stock, and we'll go through it. It was incepted back in 2003, had a very nice run up, a pullback in 2008 into early 2009, and then a B wave recovery and a C wave decline. We're confident calling it that because you can see the three wave nature of this B wave up. So even though it set a new high, still looks like a B wave to me. Then you get this 5-wave down move. Overall, just looks like a big ABC into the 2016 low. From there, it gave us a very nice 5-wave advance to the upside into the 2019 high, a very clear ABC pullback that retraced nearly 61.8% of this up leg here. Once it did, it turned higher and has shot off to the upside, off the 2020 low, has gone from about 1,000 upwards north of 3,000, so tripling its value over the last year or so, and it continues to look bullish. So Elliott Wave basics, down moves that are 3-wave moves or counter trend moves. When the trend is playing out, it plays out in 5 waves. So you have a first wave, a second wave. We appear to be in that third wave. Ultimately, we would expect a 4th wave and a 5th wave. So on this time frame, higher prices are very clearly indicated by this Elliott Wave pattern on AAL. So let's go ahead and zoom in on this action off the 2020 low. It too looks trendy and bullish. Again, every up leg looks like a 5-wave move. Pullbacks are counter trend affairs, another 5-wave move, counter trend affair, and then you have this action at the upside here. It's a little hard to understand exactly what's happened more recently, but it absolutely looks bullish. It could be like kind of what we're seeing in the overall market, where we might be getting an extended 5th wave advance off the 2021 low. That's a possibility. But more than anything, if we just zoom in and look at this 2021 action right here, we see an absolutely beautiful setup here. You get this advance off of January's low, a 1, 2, 3, 4, 5-wave advance, and a very clear 3-wave pullback to the downside, and then it's turned higher. So you have a trendy 5-wave advance, a counter trend 3-wave pullback, and then a breakout to the upside. So this looks very bullish. This looks like a setup, again, for the formation of a larger 5-wave advance. So regardless of what time frame we look at here, we're seeing incomplete upside patterns, right? We want to see a 5-wave advance form off the 2016 low. We're not there yet. We come here, we see this advance off the 2020 low. Could be later in the game, but it doesn't appear to be done yet. And then if we get into the near-term time frame, we have a 1 and a 2 on the way up to what should be the formation of a 5-wave advance. So we are bullish on AAL. I very much could understand if you own it, and if you don't, I could certainly recommend owning it from an Elliott Wave perspective. 28.35 is the key level to keep an eye on. As long as AAL is trading above 28.35, you can own it, and this thing is going to look trendy and bullish with a ton of potential ahead. A move below 28.35 at any point would be a huge warning. Personally, that would be my cue to exit. If you want to play it on a little bit longer time frame, 2600 is the drop dead level. If it moves below there, then you're talking about saying that this up leg off the 2020 low is completed, and that opens the door to a much larger pullback from there. So again, 2600 is the drop dead level. I would use 28.35. That's more of a near-term indication that this is not as it appears to be, and once that happens for me, that's my cue to exit. So I would be bullish on this guy. It looks beautiful, appears to be incomplete to the upside, as long as it's trading above 28.35. So Lautaro, I hope that's helpful. Have a wonderful weekend, and we will talk to you very soon. Take care.